So the Bank of Canada cut interest rates today 25 basis points, but it seems like they've almost given up on fighting the Canadian government's inflationary spending and immigration policies. Hear me out here. There are a couple of clues in their press release today and their monetary policy report that was released, and I'm going to go through those in today's video. Stick around till the end because I'm going to talk about some comments that Tiff Macklem made specifically about future rate cuts and what you can expect there. Let's get into it, but before we do that, please like this video and subscribe to my channel. Thank you. Unless you've been living under a rock like I have, you probably already know that the Bank of Canada just reduced their policy interest rate by 25 basis points to 4.5% for the overnight rate. If you are focused on the Bank of Canada reducing interest rates by 25 basis points, you are paying attention to the wrong move that they made today. What the Bank of Canada also did, and you can see this on their website here, is they released something called the Monetary Policy Report. So they do this on a quarterly basis. So I'm going to quickly go through a couple of important charts from this Monetary Policy Report that give us an idea of where the Bank of Canada is and kind of what they're thinking. There's also a video available on YouTube that is the release of the Monetary Policy Report as well as their public questions and the press release. And there were a couple of really good questions fielded from the media by Tiff Macklem and Carolyn Rogers. And they gave some really good insight into things that I think are worth discussing. So I'm going to tie a couple of those things in here as well. If you follow me on Twitter, you know that I posted a bunch of these charts already. And so I'm going to basically just go through a lot of those. The first one is that inflation is still above the central bank's targets. The Bank of Canada considers inflation still above central bank targets, and they look at Canada, the United States, and Europe and feel that inflation hasn't gotten down to the point where they can reduce rates substantially. One of the next pieces, and this is something that was mentioned by Carolyn Rogers in the press conference where she answered a question specifically about housing, is that the excess demand from population growth has been creating this supply and demand mismatch. And you often hear realtors saying this, there's more people than houses, and that's always going to push values up. And she was really explicit about that. And I posted a video of that on my Instagram. Basically, they explain how population growth is driving shelter inflations. Interest rates alone will not fix the structural supply and demand imbalance. And this is a key thing because the government seems to be ignoring this, even though the Bank of Canada is continually hitting on this point. And you can see it here, where they mention how net flows of non-permanent residents have been revised up over their original projections. So they've basically actually lost faith in the government of Canada to reduce non-permanent residents' population, which is kind of a scary thought, honestly, from my perspective. They actually expect it to not drop until after 2026. Reasons for this could vary. We're seeing a lot of protests from international students who felt that they were promised postgraduate work permits because of flaws in the international student system. There's a lot of challenges with labor mobility fraud, LMIA fraud, and I'll get to that because there's a really interesting chart that they have in that regard. They expect real GDP to expand 1.5% in the second quarter of 2024. Yet on a per capita basis, you can see here the growth of consumption on a per person basis continues to weaken. So again, GDP is going to grow, but that's only really because our population is growing. Consumption and growth of the economy on a per capita basis or on a per person basis is still weak. This one's really interesting in regards to the unemployment piece. And there's three charts I'm going to show here that tell a very important story. So the job finding rate has slowed. And if you look at this, the job finding rate has actually slowed to global financial crisis levels. So our job finding rate here in 2024, which you can see at the end of this chart after the steep decline and a little bit of a rebound, is now approaching the levels that we saw at the end of the global financial crisis in 2009. So again, it's becoming harder and harder for people to find jobs in the Canadian economy. Interestingly, if you look at this based on newcomers to the Canadian economy, they mentioned that newcomers are facing significant challenges integrating into the Canadian labor market. And this is where there seems to be a bit of a policy mismatch between what the Bank of Canada is saying and doing and what the Canadian government is saying and doing. Because newcomers are more likely than others to be unemployed across all working age groups. So where we are being told that the temporary foreign worker programs, the LMIA programs, the international student programs are a necessity to fill a labor shortage. And likely the people who are migrating here are being told the same story. Hey, come to Canada. There's too many jobs. The truth is that they're actually showing up here and having a harder time getting a job than anybody else. And so this is shaping up to become a big economic challenge for the Canadian economy right now. This is a really interesting chart. I find it fascinating that they even included it, kind of an aside, but that immigrants actually end up having a higher homeownership rate than Canadians. So Canadians, Canada's homeownership rate is typically like around 65-66% on an annualized basis. And after 15 years of living in Canada, typically immigrants have a higher rate of homeownership than Canadians. So probably a big piece of this thing where people want to move to Canada to realize the dream of homeownership. Some interesting pieces in wage growth, and wage growth remains elevated. I think that there is a little bit of it's worth being fearful that there's a risk of a wage price spiral or a sustained upward inflationary pressure if we continue to see wage growth. But with that being said, one of the only ways that we're going to get housing affordability restored in Canada is for wages to grow so that people have more money so they can pay these inflated prices and insanely high interest rates. They are showing that inflation is slowing in the Canadian economy, but this is the crazy part. Where CPI inflation has eased, some components are persistently high, and I want to direct your attention to the bottom here, which shows shelter, which is 26.7% of the total composition of inflation. And they talk about house price related costs, rent, other shelter, and mortgage interest costs. And actually, if you go back to that video that I posted from Carolyn Rogers, she mentions a lot of these things. But one of the big ones here is this mortgage interest cost. If you look at mortgage interest costs, it has been massively inflated for over 2 years now. And this is something that's within the scope of what they're able to control. If only somebody could do something about it. Food price inflation, a little bit out of scope for me to talk about, so I'm not going to touch on that one. Again, inflation in services excluding shelter seems to be lower in Canada. So shelter is really this big piece pushing up that inflation issue. And it's hard for them to balance this fact that we have a housing crisis and this oversubscription. Like they've literally said, without saying, that if it wasn't for this massive dislocation and demand, so much more demand than there is supply in housing, then we likely wouldn't have problems with this shelter inflation. And this is why we're seeing in their last report, and maybe I'll pull it up actually, they presented this chart that showed population growth alongside rent inflation. So they were drawing that correlation. They are expecting GDP per capita growth to strengthen. This was an interesting one for me, and I'm actually going to do a follow-up video on GDP versus GDP per capita because I got involved in a little bit of a Twitter drama with the finance minister, Chrystia Freeland, in response to one of her tweets. So I'll put that in a follow-up video. But one of my biggest criticisms of Canada's economy right now is GDP is growing, and that's great. GDP is growing, but is not outgrowing population. And so GDP per capita is falling. Eventually, that population growth should materialize in more economic growth, and it should start compounding because you have more people, more economy, more consumption, more labor, etc. There are good examples of this taking place in the US, actually, like the Mariel boat lift is outlined in this book, Good Economics for Hard Times. It's one of my favorite books, actually, and he talks quite specifically about how the population of South Florida increased by 7% in like the span of 3 months when Cuba basically shipped a bunch of people to Miami. And the knock-on effects of this were actually not decreased wages, which you would expect, and it helped that economy grow in the fullness of time. And so I think Canada is setting up for that to take place after recovery, but there's a short-term period likely where we have to iron out a lot of these really bad economic kinks that are going to present a headwind in the short term. One of the things that Tiff mentioned in the presser, if inflation evolves within our forecast, it would be reasonable to expect further interest rate cuts, but the timing is going to depend on incoming data. I would look at this chart to see, okay, what is their inflation forecast? And they show CPI inflation is expected to return to target in the second half of 2025. So it's not like this is going to happen immediately. There's still a little bit of a flat period before they see it getting to the point where they want to see it. A lot of people are thinking, it's going to be almost immediate and we're going to see further cuts, but they are beginning to cut cautiously with these small 25 basis point cuts. I think in fear of measuring that kind of temperament of the economy and seeing if the economy is actually at a point where rate cuts aren't going to ignite the market again. A really good example of this would be when the Bank of Canada first paused on hikes and people thought, oh, well, if they're going to pause, the next thing would be to cut. The housing market went nuts. And that was at the beginning of 2023. And then they still had to hike a couple more times after that because of something called the pivot paradox. And the pivot paradox is basically where if people think the central bank is going to pivot or reduce rates, then they behave as though rates are going to be reduced. So they go out and they spend money, or they make investments, or they become more optimistic. And that all of a sudden ignites the economy. The economy gets more inflationary. It heats up a little bit. And then that necessitates the central bank to actually not be able to pivot or not be able to reduce rates, and they actually have to hold. And so this is why they're kind of on the way in, they fired these warning shots, 25 basis points. And on the way out, they're doing the same thing, saying, okay, let's give them 25 bips. Let's see how the economy responds. If they start going crazy again, we're just going to have to cut it off, right? And you'll often see the central banks on the way down have to kind of go up and down a little bit because of the way the economy responds. And Canada's economy is incredibly fueled by debt and credit markets because we have the highest household indebtedness in the world. So on the way up, we felt it a lot. And on the way down, we're going to feel it a lot too. If Canadians keep piling on debt, there's going to be a problem with the central bank. So I'm really interested in what you have to think about this report. I'd love to hear your thoughts in the comments. I'd love to have a discussion with you about it. And hopefully you got some value from this video. And let me know if there's any other reports or topics that you'd want me to cover on this channel.